Hello and welcome. Are you self-employed or a landlord here in the UK? Well, you're in the right place. We've teamed up with the experts at My Tax Accountant to bring you this straightforward guide to making tax digital, where we're going to break down exactly what these new quarterly updates really mean for you.
Right, let's jump straight in. If you're a sole trader, a landlord, or maybe you're just juggling a side hustle, you really need to listen up. HMRC is completely changing the game when it comes to reporting your income, and it's happening a lot sooner than you think. This isn't just a minor tweak. We're talking about a fundamental shift in the whole rhythm of your tax year. So the big question is, are you ready for it?
But don't you worry, we've absolutely got you covered. Over the next few minutes, we're going to walk through everything step by step. We'll look at this new tax reality, figure out if you're on the list, get to grips with the new deadlines, check out the digital tools you'll need, learn how to steer clear of penalties, and finally, see how to wrap up the tax year. Think of this as your roadmap from confusion to complete confidence.
So let's kick things off right at the beginning. Making tax digital, or MTD as you'll hear it called, is basically the government's grand plan to bring the UK tax system into the 21st century. For you, the biggest, most immediate change is moving away from that one massive annual tax return to more regular digital updates. This is the new foundation. So let's get these core ideas straight.
First things first, let's bust a huge myth right now. A quarterly update is not 4 tax returns a year. Let me say that again. It is absolutely not 4 tax returns. It's much simpler. It's just a summary of your business income and your expenses sent to HMRC every 3 months using special software. You're not calculating a final tax bill, and you're not paying anything at this stage. You're simply keeping HMRC in the loop as you go.
And this table really shows you the difference. The old way was all about that one big, often stressful deadline. The new way is a series of smaller, much more manageable check-ins. Think of your quarterly update as a running total. It gives you a pretty good estimate of where you stand with your tax. The annual return, which is now called the final declaration, is where everything gets locked in and finalized. The crucial thing here is changing your mindset from a single yearly scramble to a continuous digital process.
Okay, so you get what it is, but does it actually apply to you? This next bit is super important because we're talking about who is affected by these new rules and, just as crucially, when they need to start.
This is the magic number you need to remember right now, £50,000. If your total gross annual income from your self-employment and/or your property business is more than £50,000, then yep, you are on the list. And notice I said combined income. So if you rent out a flat and have a freelance gig, you have to add that income together to see if you cross the threshold.
Now, let's look at the timeline. Right now, in 2025, you can actually sign up voluntarily. Honestly, this is a golden opportunity to get your systems sorted out without any pressure. Then, from April 2026, it becomes mandatory for everyone earning over 50 grand. A year later, in April 2027, the net gets wider and pulls in those earning over £30,000. So, find yourself on this timeline and start making a plan.
Now, MOTD isn't for absolutely everyone just yet. There are a few specific exemptions. So, if you're insolvent, a minister of religion, or if you use a system called profit averaging, which is common for people with fluctuating profits like farmers or artists, you'll stick with the classic self-assessment system for now. As always, it's a good idea to check the latest government guidance if you think any of these might apply to you.
All right, let's move on to the practical stuff. We've covered the what and the who, so now let's master the when. This section is all about getting into that new quarterly rhythm and making sure you never, ever miss a deadline.
And here they are, your 4 new best friends. These are the standard quarterly periods that follow the UK tax year. As you can see, after each quarter wraps up, you get about a month to submit your update. So for that first quarter ending on July 5th, your deadline is August 7th. I would genuinely recommend pausing and putting these dates in your calendar right now. And here's a fantastic little pro tip for you. If your own accounting year runs neatly from, say, April 1st to March 31st, you don't actually have to use those slightly odd tax year dates. You can choose to use calendar quarters instead, like April 1st to June 30th. This can make your own bookkeeping so much simpler because everything just aligns perfectly. It's a great bit of flexibility they've built into the system.
Okay, we know the deadlines, but how in the world do you actually file these updates? This section covers the essential tools you'll need and the step-by-step process for getting your submissions done right.
It honestly boils down to these 4 simple steps. First, you have to pick an HMRC recognized software. You can't just use your old spreadsheet anymore. Second, you have to keep all your records digitally inside that software. Third, you'll connect that software to HMRC using your government gateway ID.
And finally, at the end of each quarter, you just review the summary software has put together for you and click Submit. The software really is designed to do all the heavy lifting.
Let's make this feel a bit more real. Meet Lenny. He's based in London, he's a rideshare driver, and he also does freelance web development on the side. His combined income is £53,000, so he is smack bang in that mandatory MTD group from 2026. Now, the absolutely crucial thing for Lenny is that under MTD, his driving and his web development are two separate trades. This means he has to keep separate digital records for each one.
And this is pretty much what Lenny's new life would look like. His software, QuickBooks, just sends him a little reminder. He logs in, has a quick look at the income and expense summaries for both his driving and his web design, and with a single click, both updates are sent straight to HMRC. The whole point here is efficiency and accuracy, and saying goodbye to that last-minute year-end spreadsheet panic.
Now, this is a question I hear all the time, and it's a completely fair thing to worry about. We're all human, right? Mistakes happen. What if you forget to include an expense or you type in the wrong income figure? Is HMRC going to come knocking on your door?
Well, the simple answer is no. The system is actually designed to be quite forgiving. You don't need to go back and try to resubmit the old update. You just make the correction when you're preparing your next quarterly summary. Because the updates build on each other, the software automatically sorts out the change for you. It's a much more fluid and way less stressful way of dealing with small errors.
Now, while the system is pretty forgiving about honest mistakes, it is strict when it comes to deadlines. So let's talk about the new penalty system. It's really important to understand this, not to be scared by it, but just to be prepared.
So, how does it work? Well, HMRC is using a new points-based system. Think of it like points on a driving license. For every single quarterly update you submit late, you get 1 penalty point, and once you collect 4 of these points, you hit the penalty threshold.
Hitting that 4-point threshold automatically triggers a £200 fine. And just be aware, every late filing after that, while you're still at the threshold, will trigger another fine. But here's the good news. The points aren't permanent. They actually expire after a period of good behavior, so if you get back on track and start filing on time, your slate gets wiped clean. The message from HMRC is crystal clear. Consistency is key.
So you've done it. You've successfully submitted your 4 quarterly updates. Congratulations! But the year isn't quite over. There are a couple of final steps you need to take to officially close out the tax year and finalize your bill.
After the tax year ends, you'll submit 2 final things. First is something called an end-of-period statement, or EOPS, for each business you run. This is where you make your final tweaks and adjustments, like claiming for any big business assets. And second is the final declaration. This is what replaces the old self-assessment return. It pulls all your income together to calculate your final tax bill. And the best news of all, the deadline for this is still that familiar old date, the 31st of January.
Phew, we've covered a lot, and I really hope you're feeling a bit more prepared now. Making tax digital is a big change, there's no doubt about it, but it's completely manageable. And if you're feeling even a little bit uncertain, you absolutely do not have to go it alone. The team at My Tax Accountant are specialists in this, and they're ready to help you out. You can reach them on WhatsApp or give them a call on 07854-255-375. Or just drop them an email at info@mytaxaccountant.co.uk. And for more simple guides just like this one, make sure you subscribe to their YouTube channel. Thanks so much for joining me.